Intel reported their earnings yesterday, folks, and today it's not looking too good. The company's stock price is currently down by 7%. What does that mean for potential investors, and what does that mean for those like yourselves that may be holding this company and this stock? The short and sweet answer of it is that this is a large ship. It's a large ship that controls a majority of the waters that is the semiconductor industry. They have a large market share, and thus, being a large ship, it's going to take a little while for this company to turn itself around. In this video today, folks, we're going to investigate the financials of the business and figure out the intrinsic value of this company so you have a better idea of what you should be expecting of this business. With Intel, every time earnings comes around, it's always a lovely bumpy ride, and you see a lot of things happen. Majority of things being that the stock price loves to drop, and these huge dips might be an opportunity for you to buy this company. Over the last year, this company's stock price has been going down from the high of, let's say, it hit a high of $51 in 2022, and now here we are at $27.91. That being said, let's load this up in the stock spec software. Now here, the company's getting a grade of 9 out of 10. Now, for most companies, that is a phenomenal score, and honestly for Intel, it is a great score. It just means that the company has strong financials and a strong financial foundation. The only thing they're getting knocked in is their free cash flow, and the free cash flow growth over the last 5 years being on a decrease. And that's only because in the last year, they have invested a lot of their free cash flow into creating more foundries to make a higher amount of output. Going through these categories here, they are doing a lot of things right. They have a low PE ratio on average sitting at 14.05. They have a high current ratio sitting at 1.77. That indicates to us that they have enough assets on hand to cover the liabilities. They have a high return on equity average. Their EPS has been growing over the last 5 years. Their debt to equity is low at 35%. And they have been buying back shares by 3% over the last 5 years, something you want to see. As well as their net income is up, their revenue growth is up, and the return on invested capital is extremely high, sitting at 17% on average. When you look at the fundamentals and the financials of Intel, it's a pretty sound company. However, it reports its earnings, and there's a decline, and there's all these different things that are potentially going wrong with the business. But you have to understand, folks, that yes, this is a growing period for this company. As an investor, are you able to, can this company weather the storm? That's the main question that you have to ask yourself. If the company's making improvements, and this all stems from the CEO, and honestly, if I were to hear that earnings were going down and the leadership doesn't look promising, or the fundamentals don't look promising at all, I would back out. But here you have a company that has great financials and a strong leadership position. The only thing is, though, as it reports its earnings, you kind of wince at the fact that they're not hitting those things. But you know what? That is fine, given if your time horizon is long. Now, what is the intrinsic value of this company? Well, what I'm going to do, folks, here is I load this up in the price analysis section here of the software, and I've done 3 different assumptions utilizing extremely low revenue growth numbers. Here's the thing, folks, they missed their earnings. Let's say we grow on an extremely low average. Let's say the revenue grows, let's say 0.5%, 0.8%, and 1%, given that their 1-year number of revenue growth was extremely low over the last year. Couple that in with a profit margin, free cash flow margin that matches what this company has been doing over the last, let's say, 10 years, with a low price of free cash flow and low PE ratio, 30% return. We'll see what the software puts out. And if you're enjoying the video so far, folks, hit that like button and subscribe button. It means a lot to me, it means a lot to the channel. The software I'm using, if you want to get your hands on it, follow the links in the description box below. So the software is going to calculate, it's going to run these numbers here. The current price of the company is $27.84. So we're going to see what we should be paying for Intel today. Let's see, taking a little bit of time here. And here it is, folks. Here it is. The average calculation comes out to be $33.95. What does that mean, folks? If you pay $33.95 today on average, and even on the low end, it's $24, moderate's $34. Let's call it $34, guys. If you pay $34 and you believe these extremely low revenue growth numbers, Intel's a buy all day and it's extremely undervalued. The company's stock price is currently down 7%, as I said. These dips here are great buying opportunities from transferring wealth from the weak hands to the strong hands. Personally, I have a stake in this company. I own stock in this company, so I'm coming with a little bit of bias, but I am fully prepared to walk out of this position if I don't believe in this company in the long run. But fortunately for myself, I do. I believe this company in the long term will be a phenomenal investment. And currently being under the guide of Pat and it being undervalued currently, this makes it a very favorable position for myself. As I said, 9 out of 10 score on the software here. Strong fundamentals, strong financials. It owns a majority of the market share. It's just hated on Wall Street. Anyways, folks, that's the video. Let me know what you think about this video and about the analysis process. And for more videos like this, make sure you subscribe to the channel. I will see you in the next one. Thank you so much for watching. If you enjoyed this video, folks, make sure you don't miss out on what I believe is possibly the best stock to own for 2023 in this video right here. You don't want to miss out.